Your credit score is dropping and it's not your fault. Missed payments or late payments, high utilization, lower limits, and it's all connected. Inflation is one of those things that many people don't realize has a domino effect. And in this video, I'm going to break down how inflation is affecting you. And I'm going to give you 3 practical solutions and 2 bonuses. The last 2 bonuses are my favorite. And this is what you got to understand. I've helped hundreds, if not thousands, get on the right side of inflation using these simple, easy to apply practical tips that I'm about to share with you right now. Let's start off with, what is inflation? Inflation is the cost of goods and services going up, and many times your money is actually staying the same. So if things cost more, you might have made $100, $1,000, $2,000, but that $100,000, $2,000 is worth less due to the fact that things cost more. This is why some people say that saving is a losing strategy, because all they got to do is flip the switch, change the price, and your money instantly became worth less. And that's something that really people don't look at as a robber of their wealth. The fact that a grocery store can just mark up a price, and now that price is double what it was yesterday, is crazy. And that's robbing you of your wealth. Well, what are some of those solutions, and have I helped hundreds, if not thousands of people get and take control of inflation? So number 1, and I told you I got 2 bonus ones at the end. The first thing you got to understand is what many people may already be accustomed to, and that's budgeting. Budgeting is basically seeing what you can cut back on. And I know that's cliche, but it's effective. It works. Figure out what is it that you can actually cut back on, and cut back on it. So if you have too many streaming platforms, cut back. If you got too many subscriptions somewhere, cut back. If you're overpaying or buying things that you don't necessarily need, cut back. Now, it's not just the cutting back that helps. It's the cutting back and then applying the cutback to something that can help you bounce back. What do I mean? Say you save $20 in streaming. Say you save $200 in some of the subscriptions you didn't need. Say you save another $100 or $180 in some excess spending. Right there, just off the simple math I just gave, that's $400. $400 now can go towards something that helps you bounce back, whether that's paying down debt, paying down credit cards, paying off something. That extra $400 a month that once was going out is now being redirected elsewhere. And that could position you to do a couple of things: better your credit, but also put you in a better position to where you have more cash flow. This is income shifting. This is shifting your income from one thing to another thing that gives you a net worth increase automatically. And that's just number 1. We haven't got into my final 2 favorites that'll be included in the bonus. I said I was going to give you 3, but I'm going to give you 5 total if you stick around to the end. The second thing, and this works perfect for a person who works a job, is I need you to go to your job. And you don't have to go to your job for the first part, but I need you to eventually go to your job and give yourself a pay raise without asking your boss. What do I mean? Well, if you work a job, you filled out a form at some point known as the W-4. That's the tax withholding form. This form lets the company know how much money to take out of your paycheck. What if I told you that most people were overpaying in taxes on their paycheck, meaning a certain amount of money is coming out of their paychecks, and it's usually more than what it should be, anywhere from $200 to $800. Sometimes every paycheck, sometimes every month, and many people over $1,000. What could you do with an extra $200 to $800 per month? Not even, let alone per paycheck, per month. Let's just shoot in the middle. What could you do with an extra $500 coming back into your household? On top of the $400 you might have saved from cutting back. That'll give you that $900 to an extra $1,000 that you can start applying to things like debt, things like, credit cards or paying something off. But an extra $500 is game changing if you just properly fill out your W-4, and now on one of your next paychecks, you'll end up getting a higher paycheck. And it's not just about getting more money and doing nothing with it. You apply it to something that's going to make life better. This is how you really dominate inflation. just by saying, okay, I work a job, they're overtaxing me. I didn't know they was overtaxing me. Mr. Smith showed me how I can solve that problem by bringing more money in. I take that more money that's coming in, and now I knock these debts out, and it feels better. It feels liberating. It feels like I got a solution to this madness. So definitely take heed to that. We got videos that can teach you, and if you stick around to the end, I can show you how to apply all 5 in one place, one location, and put you in a position to win. The third one that I really want you to understand, and this is of high importance as well, and I hinted on it already, but paying off debt is a strategy to outpace inflation. Why? Because if you pay off debt, you save money on interest. That's another form of cash flow, because if you pay down your credit cards, say your credit card interest rate was 22%. Well, if you eventually pay that credit card off, they're no longer charging you that 22%. If you get the balance low, then the 22% is going to be on a lower balance, so it's going to be a lower amount of interest being paid. So that is a cash flow strategy. If you ultimately pay a debt off, then that debt is no longer a bother. It's no longer a worry. It's no longer on your expense part of the balance sheet. So now that goes away, and that debt that you paid off is now extra cash flow that you can apply to something else. So debt elimination is also another thing that helps you outpace inflation. Very important, especially if it's debt that isn't tied to some type of asset. Now, if it's a debt that's making you money, that's a different strategy. But if it's a debt that's only costing you money, then you want to get rid of it, in this strategic manner. That's just number 3. So you stuck around to the 3. If you only came for 3, then thank you for tapping in. Consider liking, following, sharing, all of those things. And if you want access to everything all in one place, that link is available. However, if you want those bonus 2 that I figure are my favorite, then this is going to bless you. The 4th one is get another stream of income. Whether you want to call it side hustle, whether you want to call it starting a business, an additional stream of income push you in a place to where you're not limited with some type of salary cap. If you're not already, an entrepreneur, don't already have a business, but you're not limited to some type of salary cap. If you have another stream of income, it makes sense because you got multiple bills. Why not have multiple streams of income? So having more income coming in is something that can help you hit your goals faster, because now you have extra money that wasn't factored into your overall household expenses. Now that's coming in and you can apply it to something else. So creating another stream of income, your choice. I got something that I can, expose you to that may help you create multiple streams of income if this is something you're interested in. But if you have other interests, create another stream of income, and that can help you outpace inflation when you apply it with everything that I've shared. Now, the bonus on top of the bonus goes hand in hand with creating another stream of income. And this one is tax deductions. You see, when you have another stream of income, another form of making money in the form of a business, what that does is position you and unlock over 400 tax deductions. Stick with me. Because a lot of times people don't look at tax deductions as a way to outpace inflation. What you got to understand about taxes is that many people will pay over $1 million in taxes in their lifetime. What if many of those taxes that you paid were expenses that were tax deductible to offset the taxes that you would have paid, and instead of you paying that $1 million in taxes, you wrote off $500,000, $750,000 over the lifetime of your business, or even more if you make more. This is a game changer. When I learned this and I realized this money I was already spending anyway or circulating anyway, that could be tax deductible. That can help me offset my tax liability. So when I filed taxes, the money that I was going to spend anyway now became tax deductible. What do you mean, Mr. Smith, when you say money that you was going to write off anyway? Well, most people are going to drive their vehicle anyway. Most people are going to do some type of travel anyway. Most people are going to pay for their phone bill anyway, internet anyway. So these are things you're going to do anyway. So if you're going to do them anyway, I need y'all to type anyway in the chat right now if you've made it to this point. But if you're going to do those things anyway, why not make it tax deductible? Because if you're doing business and you have a side stream of income, it's a good chance you're going to need your phone in order to build or grow that business. You're on social media anyway, you're posting on there anyway, why not talk about your business? And now you're making portions of your phone up to 100% of your phone tax deductible. Your phone bill tax deductible. Your Wi-Fi tax deductible. Well, if you also understand that you doing things in conjunction with your business can be tax deductible, then that means the miles that you drive on your vehicle can be tax deductible. To the tune of every 2 miles you drive is over $1 that you can be saving in taxes. So every 2 miles you drive is $1 plus, and it changes every year. But I believe for this year, it's the highest that I've seen, and it's like over 60 something cent per mile. So let's just say it's $1.20 for every 2 miles. Let's just, for safe number, say $1 for every 2 miles. Well, if you drive 12,000 miles per year, that's $6,000 in the form of a tax deduction that you get to write off. And it's not about you having to know how to do this and know how to file taxes. It's a matter of you just understanding and keeping records. Okay, you drove 12,000 miles for the year. Okay, 10,000 of them was for business because you made sure that it was for business. Okay, you hand it over to your tax professional, and now that tax professional knows how to put it into your Schedule C or whatever filing status you're under, and now you're able to get that tax deduction, offset your tax liability, bring more money back into your household, and offset inflation. All because you understood that your tax deductions can bring more cash flow into your pockets, and that can position you to apply it in multiple areas. And now the things that you were spending money on anyway, and sometimes you can position yourself to have certain things that you might buy that are in the area of inflation, like certain household items you buy, certain foods you might buy, depending on your business model. I'm gonna just leave it at that. You can position those things to be tax deductible. So even though it was inflation involved in these price points, you were able to write it off as a tax deduction because you had a side business and you start understanding how to tie it all together, and you had proper record keeping, and that record keeping positions you to be able to have records and proof of the expenses that you had. You turned it into your tax professional. The tax professional did your taxes the right way, not being scared, but using the laws to your advantage. And now you've officially dominated inflation. Now, if you want to know how to do all 5 of those, then it's a link down below. But the fact of the matter is, and this is a brief recap, I want you to understand, number 1, you need to cut back in the areas that aren't benefit you. Number 2, you need to make sure that in addition to cutting back, if you work a job, figuring out how to you can give yourself a pay raise, a legal pay raise. I show you how to do that as well. Number 3, you want to make sure that you are paying down debt, because debt positions you to pay something off in full, save money on interest, bring more cash flow back into your pocket, slicing inflation in half. Number 4, get a side stream of income. Number 5, make sure you get those tax deductions, because those tax deductions position you to really dominate inflation. Do all 5 if you really want to win in the world of inflation, and I promise you, you'll thank me later. Salute.